Who are you?
My name's Tim Kelsey, and I'm a real estate attorney at Boyle, Bain, Reback, and Slayton. Jim has asked me to do a little bit of information update, description of title insurance, because whenever anybody buys a piece of real estate, regardless of the risk or where it is or who they are or who their seller is, if they're taking out a mortgage, the bank is going to make you buy a lender's title insurance policy. That's just a cost of doing a transaction. People always, the question becomes, what about owner's title insurance? And that, for a lot of people, is a strange concept. It seems like one of those crazy charges that you don't feel like having to pay when you're having all these other real estate charges, but it's actually a reasonable thing to consider. The main thing to keep in mind, whether you're purchasing a farm or a condominium in the middle of a city or a brand new construction home that just was subdivided and only, for most people's minds, has been owned by one person, and that is the builder, every one of those pieces of real estate is part of a chain of title. Going back to the King's Grant, properties changed hands either by will or deed at an arm's length sale or a gift, inheritance, those kinds of things, or probably more likely some combination of those things. And at any one of those links in the chain of title, any one of those transfers, there could be mistake, there could be fraud, there could be something that causes the title to the property, the chain of the title of the property, to have a weak link in it. And what title insurance is designed to do is to protect the owners against that weak link. The lender makes you do that because they're not in the business of assuming that kind of risk. And you as the owner should take some time to think about whether or not you want to protect yourself as well. It's always a cost-benefit analysis. Find out what the owner's title insurance premium is, obviously. If you have any equity at all in the property, it's usually worth purchasing. And that is, maybe some examples would be useful at this point, and that is, I always like to think of the same silly example, and that is at some point in the chain of title of the property, somebody owned the property and they died owning the property, and they didn't have a will, but they did have children. And at the time of the death, pursuant to whatever statute was in place in Virginia for intestate distribution of real estate, probably the three sons, and again this is hypothetical, the three sons inherited title to the property. And if two of the sons got together and decided they wanted to sell the property, but the third did not and refused to sign his name to a deed, and if the two ganged up and forced the sale, forged the signature or some other means, that third brother, if that happened, could sue the buyer of that property. Not because the buyer's done anything wrong, but because the buyer is now the owner of the thing that that third brother thinks he has a claim to 1/3 of the value of. He'd also sue the lender because there's a statute in Virginia that requires these clearing up of title mistakes to sue and name anybody as a defendant who has an interest in the property. And the lender necessarily will have a deed of trust interest in the property. So the lender doesn't have to defend the lawsuit, doesn't have to research whether the third brother or his children or grandchildren, whoever exists at present day, doesn't have to research that claim, doesn't have to appear in court, doesn't have to file an answer, doesn't have to pay attorney's fees, doesn't have to pay out 1/3 of the value of the property if that claim turns out to be valid. The lender's title insurance protects the lender from those losses. And if the buyer also buys owner's title insurance, subject to some exclusions, which you'll want to look at, the buyer could likewise not have to hire an attorney, not defend the lawsuit, and carry on about with his ownership of the property. Most people ask me, well, Tim, I'm paying you to get me clear title to this property. And in fact, that's true. Most purchases, I don't do any purchases without a search of the chain of title to make sure, based on the clerk's office records, everything looks good according to what we can see. The title insurance really protects against things you can't see.
Is it worth for a buyer to get in most cases?
It's a cost-benefit analysis. I mean, you look and see the lender, if you have a mortgage loan, then you're going to have to buy the lender's title insurance, and most title insurance companies will issue the owner's portion for a very reasonable amount, $200 or $300 or $400. my quick and dirty analysis for all of these is look at the bottom line of the HUD settlement statement to see how much equity you have in the property. How much money do you stand to lose if somebody jumps out of the woodworks and says, you know, my husband had his mistress sign a deed to my house. I never signed away any interest in it. If you've got $20,000, $10,000 invested in what in most people's cases is their biggest asset, their real estate, it's usually worth the one-time owner's title insurance premium to protect it. You live your life having your owner's title insurance policy and you never need it. Most people don't say, well, gosh, I sure wish I had that $200 or $300 back from that settlement day. But if you do not buy the owner's title insurance and some freak, you know, 1 out of 1,000, something goes wrong, it could hurt kind of a lot. It could hurt your biggest asset, what's most people's biggest asset.
Cool. Well, thank you very much, Tim.
No problem. Happy to help.